These arrows mark the CPI data. Now, it shows the reaction to what the SPY did, and this is important. Hey everybody, in tonight's video, we're going to go through CPI, the indexes, what to look for tomorrow, what I think is going to happen, and what you need to be paying attention to more than anything. So, as always, subscribe to the channel, click all notifications. What we go over here is extremely timely. We will be going live tomorrow as we usually do, but we will start at 8:15. Make sure you tune in because it's going to be probably the most volatile and most tradable event, long or short, that we probably have of all of November. Now, here we are, and you can see how we react to that CPI. There's always something going on, whether it's a gap down and a rally, gap down and a rally, right? Surprise. There's always something going on, so we know that we're going to have a very volatile day. Now, one of the easiest ways to measure what the move might be is just use average true range, and it'll give us an understanding of what we are actually looking for. Now, why is this important? It's important because at least we can get an understanding. Usually, you're going to move at least one of these. Sometimes you're actually moving two of them, right? So if you look at this, for example, last time was 350 and we went all the way to 365. Essentially, you had a second standard deviation move, right? The average true range being one standard deviation. Why is this important? Because it tells you what to expect. So for example, we have an 8-point range. So let's just say the number's bad and you're at 372 tomorrow and you think it can't go any lower. Well, technically, it's telling you that just based upon the average range, if it's bad, and if we wanted to sell off, we could actually get to 364 fairly quickly here. So I think it's important to understand that as we move forward here. Now, the SPY will be one that will get hit, but you're going to see a couple others that are obviously going to get hit if this is bad, and we're going to get into that. Okay, IWM is already setting up an H right here. Okay, so these are some of the things that I'm going to suggest that you do, and then we're going to drill into this number a little bit and try and get a read on it. And I'll go through what I think. Now, this is TZA. Put this on your radar, okay, because it's going to be about the number. It's not going to be about the technical price, okay? One of the things I've been doing on Twitter and trying to get people to understand here, you can look at a technical chart all you want. If the number was bad, you're going to gap down. You might trade up, but nothing technical about that trade is going to tell you that. If the number's bad, you're going to sell down, right? You can assume that. And that's what happened here as well, right? But it just had a different reaction. So looking at the technical chart the day before does nothing for you. This movement here did nothing for you to tell you this, right? After the fact, you might find a gap fill area. So don't look at technical analysis the day before CPI and assume you're going to get some kind of great read on it. Now, if you take a look at where IWM is and you see this, TZA is the easiest thing for you to do in regards to that. Now, and also if you take a look at this, let's just put the 5 in. Look what cracked today for the first time. Okay. Again, it's a data point. If it's a great number, meaning lower than expected, that 5-day moving average isn't going to mean anything. But I do think it's interesting to see how people are positioning themselves ahead of the number. And as we know, this has been an extremely leaky Fed, to say the least. Here was a long-legged doji. It had to make a decision. This was the decision it made to close at the low of the day. And I think that that's very important for us to understand. So now we know where we are in the indexes. We know what the response has been. Let's drill into the number a little bit. This site is investing.com. It is a free site. I try to use free sites so that anyone can just go there themselves. Economic calendar, and you can sort by there. We're going to focus on CPI. Core CPI month over month is predicted to be 0.5%. Core CPI year over year, 6.5%. This is going to matter in a moment when I show you something. Then we're going to have the index. The index is the index. CPI month over month, 0.6. Year over year CPI, 8%. Okay, this is going to be our focal point. Now, what's important is just know that core CPI is without food and energy. All of this will be released at 8:30. As I said, we will be live at 8:15 tomorrow. Make sure you subscribe to the channel and click all notifications so you're notified of it. Now, the driving force behind the CPI and high CPI, and we all know that a higher than expected CPI is going to lead to equity selling down. It might lead to a bounce. It might not. We really don't know. But we go on the expectation. So if we just kind of take a look at September 1st, okay, we're going to go right here and just take a look at that first date so that you can understand where we're at and kind of get a reading on it. So if we go and take a look at this, and that reading that led to the previous CPI, which was actually not a great CPI reading, and you take a look at this level, from that period in time, we were actually down 8% for September on that bad CPI number that came out last time that we gapped down on. Now for October 30th, that's the data that's going to be coming out this time. So what we were doing, and all we're doing is just trying to get what I refer to as a back of the envelope understanding. This is where we closed and this is where we opened. Okay, so now I have an 8% move, an 8% increase versus I believe it was an 8% decrease from last quarter, or last month rather. So now we know that crude oil is going to be higher, which means heating oil, everything else, right? But we can drill into this even more. Now, this is gasoline futures, and we know that gasoline is a large part of CPI because you're dealing with transportation of goods, cost of goods. So let's just take a look at September. And if we take a look at September and where you were basically down about 1% to flat. Now, if you take a look at where you are from October on and where you currently are, you just figure out, just take a rough look at it, okay? So now you're up about 6% on gas. Now we have the data, so we know what the numbers are supposed to be. On top of having that data, we now know that gas and oil, which have been the driving factor of non-core, and we know where that is at. Now, what is in front of me is the U.S. Cleveland Fed inflation. Okay, this is a site called Macro Micro. You can do this yourself. It's a free site, but here's the point that I want to get at with this. Here is the CPI year over year. Here is the Cleveland Fed. This is their estimate in we'll call it kind of like a burnt yellow, right? So if we take a look at this and we look at the blue, we can see that the blue is constantly doing what? The blue is constantly doing a little bit higher than what the estimate is, aren't they? So in other words, their estimates have been consistently low if you were looking since November, right? So you had one here that was a surprise, but you're either in line or you're above, right? I mean, that's really what we're seeing here with this. So what are we going to do about that? Well, I'm bringing it up because if you go out here and you take a look at the November date, we're looking for 799. And we know exactly what we were looking at before, correct? We were looking at this 8%. You want to make sure you're comparing apples to apples. Now, you have core CPI. That is in red. The green is their estimate. Why is this important? If you take a look at this chart, you can see pretty clearly that besides a couple times, that the core has been higher than the estimate. So if you come here and you take a look at their estimate, you'll see that their core year-over-year estimate is 6.58. We are looking for 6.5. So now we know a couple things. We know that gas is higher. We know oil is higher. We know how that translates into pricing. We know exactly how that translates into transportation costs and goods sold, right? We're all aware of that. The question becomes now, how do we profit from that? Well, we have to understand that until we see the number, we just really don't know. But it would be kind of surprising to see a number that is not higher than where the Cleveland Fed has been, just a little bit under the nose, right? So I'm leaning that way, that it's probably going to be a little higher than expected. That's how I'm personally positioned, and I'll be watching extremely closely, and I will act immediately based upon that. So make sure you do join us tomorrow. But I do want to leave you with a couple things. So like, let's say it's bad. What do you do? Okay. If it's bad, meaning higher than expected, my advice is you can focus on a couple names, and I'll give you a couple names to focus on. But I'm going to tell you this. If it's good or bad, you should have those four numbers in front of you, specifically the year-over-year numbers. And the moment you read those, you act. If you go look at the past 830 data, that's exactly what happens. But I would be leaning towards things like this. I would be leaning towards highly levered ETFs that you can get in, get out, and not company-specific risk. There's a lot of company-specific risk out there right now with Bitcoin. I did a whole video yesterday on which names to short. You might want to watch it. I'll link it at the end. People that watched that video did exceptionally well today, I would hope. I mean, I know I did exceptionally well off that video with the information, so I will link that at the end. And Bitcoin's not done here by any stretch, in my opinion. But see these like SOSX, these are all setting up to move, okay, all of them. But we don't know that that's going to happen until the CPI number. And I know people saying we can't build a model around one number. All you're trying to do is get through tomorrow and trade tomorrow. Just think about it from that perspective, okay? SQQ, so again, Pro 3X Ultra Short, okay, for the NASDAQ. They are the two if the number is higher than expected. TQQ is what I would be leaning towards if the number is better than expected. I wouldn't think about it. I would just very simply put the trade on and set my stop behind it. It's very hard to give you technical levels, as I explained earlier, right? And the reasoning behind why it's hard to give you technical levels. Now that we understand that, the next step is what else could we benefit? Well, let's think about this. We know that TZA, okay, is linked to small caps. And we know that the bond market is going to move, right? So we know that there's a way to play that, but there's not enough edge. But the TZA Bear Fund, this will go up because you're highly levered to yield, right? And it is also highly levered to inflation. Keep this one in mind as well. If it is lower than expected, TNA makes the most sense. Again, I see the H as well, but as we walk through it, we just don't know what we're going to get. Life's a box of chocolates, right? So keep that in mind. They are the names that I would focus on the most. If you are looking for individual names, if this is bad, Apple will get absolutely crushed tomorrow. Okay, and the reasoning for it is based upon the price earnings multiple and the fact that it really has, even though it is down, it has not come anywhere near down to where you're at with the Metas of the world or even some of the Googles, right? Like you're down, but you're down 23%. If you go and take a look at names like, something like a Google and you look at where you are from the high, you can see pretty clearly that you are down substantially more, right? So when you start understanding that these names are already down 40, 50%, but Apple is only down 23%, that's what happens. And this is what they come for. They come for the generals last. The other one that will get absolutely decimated is Tesla. So Tesla had this huge bear flag we talked about in Saturday's video, which I will link at the end here. And you can see how we just broke and that's it. And now you're basically busted. The PE on this is still insanity. When I walk people through it, I said double the earnings. I make the earnings, say they double their earnings next year and take the best quarter, right? So make it $1 and then make it $8. 8 times a 20 PE, which is an insane average PE for this kind of environment, is going to put you in a place where you're at $1.60. So if earnings doubled next year and you use a 20 PE, it puts you at $1.60. So this has a long way to go if things start getting, quote, back to normal. So they are the names that I would look at. I pay close attention to those numbers at 8:30. Consider joining us tomorrow at 8:15 live. If you are interested in the trading community, there is a link up here in the top right. It is currently on waitlist. Simply put your name in the waitlist, and then when the spot opens up, you'll get an email, and you'll already be set up to receive the free newsletters as well. Everybody have a great evening and trade to win tomorrow.